Bitcoin is suddenly surging again. After weeks of weakness, Bitcoin has exploded higher, climbing back above $70,000 and then pushing toward $80,000. But here's the important question. Why is this happening now? Is this the beginning of another major crypto rally? Or is Bitcoin simply reacting to a temporary wave of optimism? Welcome to BlockAlpha. We decode crypto. We don't chase hype. Today, we're breaking down what is actually driving Bitcoin's latest move, why Washington suddenly matters again, what the Treasury has to do with it, and what investors should watch next. Let's start with the move itself. Bitcoin had been struggling for weeks. Sentiment was weak. Regulatory uncertainty remained high. And investors were waiting for a catalyst. Then several things changed almost at the same time. The first was Washington. On August 19, President Donald Trump publicly called on Congress to pass a fair version of the Clarity Act. The bill is designed to create clearer rules for digital assets in the United States. It would help determine how different crypto assets are classified and which regulators have authority over different parts of the market. For crypto investors, that matters enormously. Because uncertainty has a cost. Banks don't like regulatory uncertainty. Asset managers don't like regulatory uncertainty. Public companies don't like regulatory uncertainty. And large institutions are much more comfortable allocating capital when they know which rules they are operating under. But there's a problem. The Clarity Act is still facing resistance in the Senate. A procedural vote is expected in September. So the legislation is not guaranteed to become law. But Trump's renewed support changed the political conversation. And the market noticed. Then came another development that had nothing directly to do with crypto. The US Treasury announced plans to significantly increase its buybacks of longer-term government bonds. Why should Bitcoin investors care? Because financial markets are connected. When Treasury yields move sharply, they affect borrowing costs, liquidity, the dollar, and investor appetite for risk. And Bitcoin has increasingly become part of that macroeconomic conversation. When investors expect easier financial conditions, when yields fall, when the dollar weakens, or when liquidity improves, assets such as Bitcoin can benefit. And that's exactly what happened. Bitcoin moved sharply higher. Crypto-related stocks followed. Ethereum moved higher. And suddenly the market narrative changed. But there's another important piece. Institutional demand. Bitcoin isn't trading in the same environment it was several years ago. Spot Bitcoin ETFs have created a much easier way for traditional investors to gain exposure to Bitcoin. And when institutional flows return, the impact can be significant. This means Bitcoin is no longer driven only by retail traders opening accounts on crypto exchanges. Large asset managers, funds, corporations and professional investors can now participate through traditional financial products. That's a major structural change. But here's where investors need to be careful. A large price move does not automatically mean that a new bull market has started. Bitcoin can move extremely quickly in both directions. And after a major rally, traders often become extremely optimistic. That's when risk management becomes even more important. So what should we actually watch from here? The first thing is institutional flows. Are investors continuing to put money into Bitcoin ETFs? If inflows continue, that could provide a stronger foundation for the rally. The second is the macro environment. Watch Treasury yields. Watch the dollar. Watch expectations for interest rates. Bitcoin increasingly reacts to these variables. The third is regulation. The Clarity Act remains one of the biggest stories for the American crypto industry. If Congress makes meaningful progress in September, it could remove another layer of uncertainty. But if negotiations fail again, the market could quickly become disappointed. And the fourth thing to watch is Bitcoin itself. A rally needs follow-through. One explosive week is not enough. The market needs to prove that buyers are willing to keep stepping in at higher prices. That's the difference between a temporary short squeeze and a sustainable trend. And there is one final point that investors should understand. Bitcoin doesn't need perfect news to rise. It needs the balance between buyers and sellers to shift. Right now, several forces are moving in the same direction. Regulatory optimism, institutional interest, changing Treasury dynamics, and improving risk appetite. That combination can create powerful momentum. But it can also reverse quickly. So don't look at Bitcoin's latest move and simply ask, how high can it go? Ask a better question. What is actually driving the move? Because if the underlying drivers continue, the rally could have room to develop. If they disappear, Bitcoin could give back part of the move just as quickly. That's the real story behind Bitcoin's latest surge. It's not simply about a number on a chart. It's about regulation, liquidity, institutions and macroeconomics all colliding at the same time. And that's exactly what makes this market so interesting. Bitcoin is no longer operating in isolation. It's becoming increasingly connected to the traditional financial system. And if that connection continues to deepen, the next major Bitcoin move may be driven less by crypto speculation, and more by Wall Street, Washington and global liquidity. This is BlockAlpha. We decode crypto. We don't chase hype. Subscribe if you want to understand what's actually moving the market.